Hello everyone and welcome to Crypto Night, the crypto investor channel. I'm Boris, so let's dive in. I'm with Colton today. Hello Colton.
Hey Boris, how are you doing this morning?
Good. Let's look at the market. So this is what's going on. It's not open yet, but it's about to open and they'll open in the red. And yesterday was very red. The Nasdaq lost almost 5% yesterday. If we look on a 5-day, I mean, we see like a major plunge from like 12,500, all the way down this morning to like 11,700. So that's really a big drop. We've seen also the Dow also do some really bad numbers. So of course that influences crypto, that influences everything. But crypto overall actually has been holding on. It's at 29,400 right now. But over the past 24 hours, it was roughly at 30. So it went down 500, which is not a whole lot for crypto. And over 7 days, we can see we're really going sideways. I mean, it goes down to 28 something, goes back up to almost 31, goes right back down after a day, down to slightly under 29, goes back up to 31, goes back down to 29, back to 30, down to 29, and back to 29 and a half now. So it's really moving sideways, which also shows, that Bitcoin is holding strong. Given the current situation, the economy, the inflation, the war, everything. Is it going to go lower? No one knows, but it is unlikely. Most likely we're going to see further down, the same. If we look on a 14-day, we see that we were 14 days ago on May 5th, we were at 39,000. So we've lost $10,000 in 14 days. And there's high chances that we're going to see probably another $5,000 to $10,000, over the next month, 2 months. It's probably going to go slowly down, lose a little bit, here and there, maintain sideways for some time. If we look at May 12th, which was roughly, it was a week ago, last Thursday, it was sitting at 26.9, and then it came right back up to 30, and we've been going really sideways now for a week. And I know it's boring for some people. They're like, man, it's not moving. All of this is very normal. There's nothing wrong. People panic. Some people are really freaking out. But why? I mean, it's a bear market, bear market happens all the time. It happens this time, it will happen again, even if we go through some bull market time, over the next year or 2 years or whatever, eventually the bear market will come back at some other point. But like we said, it's always an opportunity to buy more. So today, what I want to talk about real quick, that's important, is how to DCA. Yeah, there are two ways to DCA, in those markets. You can either DCA over time, dollar cost averaging over time, or you can DCA on different amounts, basically establishing a grid, and you already put some orders at lower prices. Because sometimes that's the other thing, is if you're not in front of your computer all the time, what's going to happen is you're going to miss out. Like if, let's say, Bitcoin drops to 25, like it did actually the other day, and came right back up to 29.30. If you were not right in front of your computer at that time, you miss it. You're going to miss it. So the same, if you have to remember every week, like, oh, I got to buy $100, every week of Bitcoin or Ethereum or whatever, you're just going to forget. So the best is to first adopt a strategy and say, either I'm going to DCA over time, because I just want the average over the next, several months, several years. Maybe your investment is also constant. It's all year through. You don't just invest for the next 6 months. Maybe you invest for the next 2 years, and you DCA over the next 2 years, and you're like, okay, I got $10,000 a year that I can put, into crypto, Money, of course, that you don't need, because you don't want to invest money that you absolutely need for buying a car or buying a house or something like that. But I don't like people saying like, yeah, you gotta put in money you can afford to lose, or no one wants to lose their money.
Yeah.
That's ridiculous when people say like, oh yeah, it's gotta be money, you're gonna be okay losing. It's money that you don't need to do something critical in your life, like sending your kids to college or buying a house or buying a car, or paying for a surgery or whatever. It's money you're going to invest and money you want to return on over time. Now, the thing is also some people are not reasonable enough. They want the return to be almost immediate. They want to take 29K right now, put in $10,000 on one of the crypto coins, and they want it to pump to the moon and be at $100,000 by next week so that they can resell and triple their money. That's not going to happen. The extremely rare time it's going to happen, it's pure luck. So it's just that you were lucky, you bought right before the market went parabolic, but this is not the way to invest. So the way to invest is you DCA. One, you can DCA over time, and there are great tools. Binance does it. They have an auto invest system built into their platform where you can say like, hey, purchase $100 of Ethereum every week, and every week automatically, you don't have to think about it. Now you need to make sure you have enough money onto your account, but they will buy automatically $100 worth of Ethereum on a weekly basis. So that's the first one. Voyager does that as well, where you can say buy on the 1st, the 15th of the month, buy every week. You have different time frames, and you can choose which one makes most sense. Some people, they want to do it at payday, because it's easier. They receive their paycheck and therefore they have the money. Some others, they already have the money, but they want to do it, slowly on a weekly basis. Some people, it's every day. You may want to decide to buy every single day. So that's the number one. So it's more like a time-based DCAing, where you DCA based on time. The other way to DCA is to put orders. Like me personally, I like DCA over time, but I even prefer DCAing with prices. So establishing a grid, today we are at 29 and a half. I'm going to start putting orders for 25, and then I'll do another one at 23, another order at 21, another order at 19. Now, they may not all hit, I may miss some of them. But as price goes down, if it goes down, prices goes down, you grab those automatically. And so if you were to invest $10,000, for instance, you may say, I'm going to do $1,000 every time. I'm going to start at 25, and every time it goes down $2,000, I'm going to invest $1,000. So the difference is that when you DCA in a grid system, you only do it during bear markets, and you only do it during major dips. So you grab the different levels, and at least throughout the year, as you know, there are times where the market is bullish and prices are going up. And so therefore, I'm not buying at those times. On the contrary, I might be tempted to sell, so that I replenish my cash pile. You need to have cash on the side. We discussed that also the other day. 12% as a minimum, 20% is much better. Some people even say as much as 30%, almost a third, and of course that's going to vary depending on the price of the coins, because when prices go down, even though you're not changing the amount of money you have on hand, the percentage is going to go up, because that doesn't vary. Whereas your coins going down in prices, their value shrinks, and therefore the percentage of your cash is higher. And the opposite happens when prices go up, and that's why when it starts going up, you need to start selling so that your percentage doesn't drop too much, and you don't get to a point where your cash reserves are like 3% or 5%. But I like the grid system personally a little bit better because you can set some prices. You can say, I'm going to start buying coins, let's say if it was Bitcoin at 25K, and then every $2,000, which roughly is a roughly 10%, it's a little less than that, but roughly every 10% as it goes down, I'm buying more, I'm buying more, I'm buying more. And you put those orders kind of in advance because you don't want to put too many orders in advance, but you definitely want to put enough in case of a sudden big drop and then, V-shaped recovery where it goes down and then comes right back up. At least you were able to grab those at great prices. And so doing DCA that way versus doing DCA over time is still pretty good. But the advantage that I see is that you accumulate more because you're concentrating your DCA only on some periods, on periods where you have dips and you take advantage of those dips. So that's pretty much what I wanted to say today, to help everybody getting prepared and have some patience. We're 29,500 right now. We could be at 29 for another 3 weeks, a month, and then suddenly bad news, macroeconomics, headwind, all kinds of things can make it though suddenly we drop from 29, which we're going sideways for like a month, and suddenly boom, we drop to 25. And at that point, you may want to readjust some of that grid DCA. If you start grabbing some stuff, you may want to put a few more orders since maybe the 25 got bought and that order doesn't exist anymore. Have some patience because if you rush, the problem is you're going to miss out on some great opportunities. So don't take your time. There's no emergency to buy crypto. Crypto will be here next month, next quarter, next year. So take your time to invest in it. We're still very early in the game. There are lots of projects. They're not finished. The metaverse is in its infancy. Take your time. There's no need to say, I got, $10,000 I got to invest this year. And then you rush right now and you invest it all right now onto 1, 2, 3, 4, 5 coins. No, take your time. Take your time because with patience, you're going to see some even better prices and greater opportunities. Any questions, any feedback, comments, Colton?
Just two things, if any of you guys want to see how Boris DCAs live in action, take a look at our crypto portfolio videos. There's 2 videos out there. Boris did this, helped me with this. So if you want to see DCAing live in action, look at those 2 videos. And another thing I just wanted to add, Boris, is if you do your research right now during the bear market, you really see the people who lost a lot of money are people who put their eggs in one basket. This is a reminder, don't put all your eggs in one basket, spread your portfolio out. Don't focus on one coin because, this could happen at any moment, like Boris has stated. So, spread your wealth out and, do your research, when you're investing in these coins. Like Boris has always said, you want to focus on the top, really 20, really. But, right now specifically, probably the top 10. But, when it's back to a normal market, do your research, get on Discord, get on Twitter. But, make those decisions diligently and, you'll feel a lot better about it. But that's it from my side today, Boris.
Perfect. Well, thank you, Colton. Thank you, everyone. We look forward to see you on the next video of Crypto Night. I hope this video helps. Thank you for watching. Have a good day. If you haven't already, please subscribe to our channel. And if you like the video at the end, click on the thumbs up.